Hello and welcome back to NDTV Profit. If you look at the markets, absolutely flat for the Nifty and Sensex. No real major move as far as the indices are concerned. Probably something that people did not expect looking in at what the global markets have done in the last 2 days. Earnings corner continue. Earnings have been coming in thick and fast. L&T Finance Holding declared their earnings on Wednesday. I caught up with them on Friday at the sidelines of their press conference, and I interviewed the management and I started by asking them that what were the key challenges in Q2? Do they believe that they have overcome the gross NPA issues that they have been having earlier? Let's listen in what the management had to say on this.
The good piece is that the volume growth has been strong. The loan has grown by 21% in the overall, contributed both by the retail segment as well as the wholesale segment. Second, the margins have shown a smart improvement by almost about 50 basis points quarter on quarter, which is very encouraging. This has happened on the back of both focus around the consumer B2C products, the almost about 20 bips of reduction in the cost of borrowings on a quarter on quarter basis. Both have contributed to the overall margin improvement. The third piece is that the NPAs have come down. The contribution has come from the retail segment by way of rollback and collection efforts on the ground. As far as the wholesale segment is concerned, we have sold about 190 odd crores of NPA assets to ARCs to enable a better recovery process. We have sold them at about 100 crores or so. With the result, we have 93 crores of losses on this, so which we will be absorbing over the next about 7 to 8 quarters. On the PAT side, operating expenses have remained stable. We have seen an increase in the credit cost, but this is primarily driven by a policy that we have tried to adapt to increase provision coverage from 26% to 33%. It's not so much the regulatory requirement. Consequently, the profits growth has been more subdued than the way the margins have improved. The profit growth is about 17% for the quarter year-on-year basis.
Right. Sir, you mentioned about sale to ARC in terms of NPAs or bad assets. Do you see that continuing in the coming few quarters?
Construction companies, I would say that in about fourth quarter, maybe we'll see some action on the ground. It's still too early to, both on the CV as well as construction equipment, it's still subdued.
Right. When last we spoke after the Q1 result, you said that there is a reasonable exposure to the CDR references. Can you talk about restructuring? What was restructuring in Q2? Do you believe the worst in terms of restructuring is now behind?
No, in fact, restructured assets have remained more or less stable. There have been no new reference to restructuring during the last 2 quarters. That's clearly something which is positive. Things seems to be improving on the ground as far as the overdues are concerned.
The NPA coverage of the company was poor in Q1. It continues to be lower than the industry average. What is the trend in Q2? When do you expect to provide more to meet the industry standards?
At the consolidated level, we will be targeting around 35 to 40%. This will be contributed by 50% provision coverage ratio as far as the retail segment is concerned, and as far as the wholesale segment will be in the 30 to 35% range. This is more as a kind of improving the balance sheet strength than actual fear of any losses coming through.
Right. So if we talk about NPAs, this quarter has seen an increase of better NPAs thanks to the ARC sale, but it's after 5 quarters of continuous deterioration. Do you see an improvement has already started in the NPA cycle?
Yeah, I think clearly the NPAs have peaked out. That's something which we do believe so. If the current pace of revival keep going, maybe we will not see further deterioration. As far as the retail asset segment is concerned, we can see consistent reduction coming through by the fourth quarter. Whereas the wholesale segment, while we may not see an increase in the NPAs, but they are not going to come down in a hurry because the resolution period is long. So that's where we will have to wait out for.
NIMs have expanded. Is this because of cost coming down or the focus on high yielding assets?
No, it's a combination of both, as I mentioned right up front. Our focus on the B2C segment as far as the retail lending is concerned. Our cost of borrowing has also come down by close to around 20 basis points on a quarter-on-quarter basis. Both have contributed to the improvement of 50 bips in the borrowing cost, the margins.
Your business has been assertive towards growth, or you've been focusing in more towards the retail side. Can you speak about that? Will the focus continue to be on the retail segment going ahead?
I think it's reaching a more or less a stable situation as far as the composition of the book is concerned. What we are focusing on the wholesale side is to increase the share of operating assets. We have been successful in taking it up to about 45% as we speak now. So I think that's a focus which will continue for the next 2 quarters. In any case, on the ground, too many new projects are also not there. So we'll take some time to see project construction financing coming through into our balance sheet.
You have an asset under management or a mutual fund business, and that has been a drag as far as the consolidated profitability is concerned. 6 months have been very good for the market. Last 3 months have been very good for the inflows. Do you still see AUM business slightly tough as far as FY15 is concerned, or you expect it to show some green shoots?
So we have achieved break-even last fiscal year, in fact, and we are continuing to maintain the break-even level during the current year as well. What's heartening is that the share of equity assets have gone up significantly compared to last year. Currently, it's operating at about 37% of our total assets under management is from the retail segment. The equity assets themselves have grown by about 42% year on year on an average basis. So which is good. We have been able to do about 4 NFOs, and we have seen positive net sales right from May onwards. That trends well for the business in the next 2 years or so.
Just a last word, the equity inflows that have been quite strong for the last 3-4 months, do you expect it to be strong for the next couple of years in terms of mutual fund inflows?
Yes, we do. We are quite optimistic about the flows into the system, as well as we getting some disproportionate share of the equity flows. But the equity flows also come with the upfront commission payment to the distributors. So that will have, so that might restrict our ability to really show financial profit. While on a overall asset basis, I think it will be interesting. These inflows into our schemes would help improve the profitability for the future years.
Right. So thank you so much for joining us here on NDTV Profit. That was the management of L&T Finance talking about the results. Absolutely flat, but results came in on Wednesday during market hours. So let's take a break. Markets absolutely flat. Nifty down about 2 odd points. But on the other side of this break, focus on markets would continue with Sarvendra Srivastava.